Hey guys, and welcome back to yet another video. This one is specifically a breakdown on the dollar Swiss, a trade that I just taken towards the back end of London session today, which is currently the 21st of October. Now, it was a great trade. Also, quickly before I jump into the analysis, I just quickly want to mention, apologies for any mic differences. I'm on my laptop using a different microphone as well, so I'm not at my computer or office, however you want to say. Now, dollar Swiss, great pair, great trade. First things first, there wasn't really much high time frame involvement in this sort of trade. If you just look here as well, especially on the weekly time frame, I mean, yes, we were tapping into that weekly POI. Daily, I mean, obviously is moving bullish as we head into that weekly POI as well. And then on the 4 hour, as you can see here, we're just more or so consolidating. So even though we are inside of, yes, this range low here and yes, this range high here, we are still overall consolidating. We had the previous mitigation of this POI here, which was very nice, but we failed to close above the highs. We just more or so wicked it or created equal highs, as you can see there. Okay, so there's definitely a liquidity on the upside long term. We should see that be taken. Obviously, if we start to take out the hedge follows, then yes, sure, we can anticipate, you know, that we're going to respect the weekly POI that you just seen previously that long ago. But right now, in terms of the market, obviously, if you just look at these candles here, it's opened bearish as we head into this new week, and obviously, price is just consolidating right there. So, when you see the 15-minute, which is what I refer to as my intraday time frame, you'll see exactly why it looks a little bit more clearer here. The M15 was just absolutely beautiful, pretty much textbook really, in terms of what to look for, as you can see here, right? So, obviously, we swept out that Asia high there, giving us a potential bias for the day, well, at least for this short-term move, okay, or whether it be a long-term move and continue bearish, we don't know, we can only anticipate, right? But right in this moment of obviously entering the trade around here, as you can see my position entry, it was obviously off this 15-minute POI mitigation, more specifically in order block, right? And obviously we had that slight imbalance there, which was also filled. Now, as you can see here, okay, we swept out the edge of highs, and then obviously we had a nice shift to the downside. We did fail to close below this low here, but we did wick it. Now, you can argue against that whether it's a closure or not, but I don't really use wick breaks, especially on the high time frame, as we only on the 1 minute, just simply because that's how I differentiate my liquidity sweeps to my closures or my breaker structures, and it's just what I've seen work out more often than not whilst backtesting. Okay, so anyways, as you can see here, we had this would be considered an internal supply. Okay, so we had the internal supply mitigation, it did respect it, and obviously again we had a nice reaction to the downside there, taking out the previous external low. We've now entered into a new bearish range. We've got this low here, and we have this high all the way up here. Okay, now the next thing to do was obviously wait for a pullback. Now I was simply looking for a pullback into this area, maybe fill this imbalance, but there obviously was no reaction, as you can clearly see there within that huge M15 engulfing candle, right? But we did get a nice mitigation of this supply here, which we can also now, once it's been respected here, we can anticipate it to be a supply chain. Obviously it's a supply chain now because it needs 2 or more touches, right? But at the time when it's tapping into this area and we start to see the M1 break to the downside, yes, that's when we can anticipate it's going to be a supply chain, right? So obviously again, POI mitigation, we had the Asia high sweep as well. Yes, we did sweep out the Asia lows, but we first swept out the Asia highs. Okay, it's quite important to sometimes look at it, especially in, well, this is a range bound market on high time, well, the 4 hour. Okay, and obviously we have that quite a bit of a bearish bias on the weekly, being inside of that weekly POI. But it's always important to look at, if you have 2 sides of liquidity, so like a range, you want to monitor which one is sweeping first, and most likely it will continue in the opposite direction of what it swept first. So for example here, it swept the Asia highs and it's continued bearish, right? That's exactly what we're looking for. Obviously if we swept out the Asia lows here and then we start to break on the M15 bullish, then that would be a different story. I'd potentially be looking at buys, but obviously we didn't come up that high and close above the highs there, so we're still inside of this bearish range. Okay, now I'll jump straight to the M1, but as you can see here, M15 range, very nice. We've got this M15 loan, which I targeted into. It was just more of a set and forget trade once I had into the position, right? I did get a slightly during trade, which is around this area here. I sent that in the analysis chat. I tried to get it before, just for my journal, but I don't really want to go back in time, like for example, use replay mode and take off this candle here, and that would be mine before. I like to have it in the moment, so if you look on the top left of the chart analysis screenshot, you can see the exact time of what I had screenshotted it at, rather than, for example, going back now, it would be the current time, which is 12:57, as you can see there on the bottom right. I don't know if you can see it on the bottom right, but 12.57 right now. Okay. So it just show up that on the top left, but I just don't like that. I don't know why. I don't know why I don't like that, but either way, it's just I managed to get the drawing before. Well, the drawing in my journal. Now let's look at the little details here. I do apologise well if you do notice any clicking on my mouse pad here. I should just plug in my mouse. I don't know why, but anyways, as you can see here, okay. Now, obviously we tapped into that 15-minute POI originally here, but price obviously didn't break any structure to the downside. We came back up, taking out this new high here, so we had this new range high and low, but obviously price again didn't take out this range low here. We just respected this order block here, okay. We then a nice little rally into the deeper side of the POI, and then obviously we start to break down bearish. Now again, remember what I said earlier in the video, guys. It's all in the course. I've been trading this way for years. Nothing has changed. I don't use closures. I use wicks as my breaker structures on the 1 minute time frame only. Why? Again, like I said earlier, it's just what I've seen happen or play out more often than not, right? Okay, especially on the 1 minute time frame. Everything that I'm trading all this way has been tested over years of data. Okay. Anyways, as you can see here, we've got a closure below the we've got a breaker structure below the slow, indicating that okay, demand's failed to hold here. We had the potential demand chain here as well. Obviously, if price had mitigated this, because this is where the previous mitigation was. This is where the potential mitigation was, but price just didn't react to it. We just violated that zone, and obviously we took out the range low, indicating that momentum is shifting to the downside. Okay, and obviously we got a hard time from bearish bias at this point, so we kind of want to see that happen anyways. Okay. Remember, you're not trying to make anything perfect. You're not trying to look for everything like this and that. I mean, don't get me wrong, the F15 was very perfect in terms of how it looked. As you can see, you can already say yourself it looked perfect. But people try and have the perfect analysis or have the perfect markup, when in reality, the market owes us nothing. At the end of the day, we just want to try and get what we can. We want to get in and out. It's not supposed to look like some sort of art or some sort of perfection thing. Just get in a trade and get out. As simple as that. Anyways, as you can see here, we had this new range low and range high all the way up here. Now we had this order block here, and obviously on the lower time frame, there would, like the 15 second, for example, there would be an imbalance within there somewhere, or a range high, and this would be a clear order block mitigation. Okay, so you can argue against that. We have a potential M1 supply chain there based on this order block. Okay, we then came back down below again, and we had a very slight imbalance there. And obviously we had this previous wick projection to the upside first as well. So we had that range high and range low here. Price had tapped into that area there, filling that minor imbalance. And obviously we had the engulfing, but we didn't fully close below this bullish open here until here, right? So my entry is a little bit off. It was around this area here. And then obviously my stop loss was just above the range high, because that's my validation point. If price was to come any higher above there, even if I had my stops all the way up here, I would obviously close the trade. Okay, but as you can see, this also counted as a breaker structure as well, so kind of two birds with one stone, I guess you could say. We had the engulfing below the previous bullish open candle low, and obviously we had that range low breaker structure as well to confirm the bearish trend again. So two birds with one stone right there, and obviously thereon we just pretty much had zero drawdown, price straight into profit, and just sort of flew. We had some pullbacks here and there, obviously again with some potential scale-ins with this imbalance fill here and this range low and this range high here. You could argue that that's a nice clear POI there, but to be honest, I wasn't really too fussed on and scaling into my winning positions. This is already a nice big position itself. It's around 5.3R, I believe. Let me just double check that. Yeah, 5.3R. So brilliant position really. And obviously if we were to manage it with structure, we'd probably close above this high here somewhere. But yeah, overall great trade. Not really much else to it. It's just simply following the process, following the plan and sticking to it. And yeah, would I take this up again? Absolutely. So guys, I hope you enjoyed this breakdown, and hope it made a ton of sense. And guys, thank you so much for watching. Take care, and I'll catch you on the next one.